Hey guys, Sunday, April the 28th. Let's go over that, guys. As you can see, this is my Elliott Wave chart. A couple of things I wanted to show you is that I believe this is a wave 5, but I'm using the alternate account. This is a wave 3, wave 4. Maybe this could be a wave 4, whatever is happening over here. Mind you, these are closes, so I know we went, change of contract. This is a target I have, and these are dates to watch. One was the 24th. The ellipse technique is the 29th, which is Monday, so keep an eye on that. Volatility will increase, meaning that maybe they slam it down, or maybe it just continues chugging along. We'll see. But either way, volatility is already increasing, and change of contract, we're kind of like in the upper range, so let's see if this is going to hold to push higher. Days to watch, May 17. May 17 is interesting. I was doing some research, and this date comes up, so I would put a sticky note on that, meaning that if we just grind higher and we're around $2, 2 something, maybe 232, that's the target I have. And we're coming and we're just doing that for some odd reason. This could be the death trap right here. So just putting it out there in the universe just for you to know. Another day to watch would be May 23rd. And this is an area I'm watching just in case the wave 5 is going to play out. Anywhere between this 147 and 151, the sweet spot. But you also know there's the June 25th, 2020 low of 144 that's lingering down there that could get kissed. So just wanted to put that out there. Stokes are kind of pretty low, and that's pretty much it. So I'm leaning wave 5 here, but for the ones that think, no, wave 5 is further down, then, we could probably grind here, but watch out for this date. It could be a death trap. And then do that wave 5. Because, April, May's, it's toppy. April and May are kind of toppy, bullish. And then it kind of June, July, it kind of dies down, depending, also on the weather and, the ACs and how hot it's going to be and all that. Okay, so here's a master chart. A couple of things here. The 45 scale. This is the 1 by 1, and anywhere between $2 and down, we're going to be facing this. If we're going to continue grinding, this is going to be a tough angle to break. But if we could break above it, then at least we're showing a little sign of strength. But so far, that remains to be seen. The good thing is that we're back holding the 60 degree on the 45 degree scale from the 152 February 20 low. And this is going to be your line that you're going to contend with. And you have to chuck along to see if you kiss it, fail it, or break above it and push higher. Next one you want to probably watch is the Gann square. We're above 190. Next level will be 207. 224, and then the 232. Possible, turning points or volatility is 5.6 and also 5.19. Keep an eye on it. You see the Andrews pitchfork? We're having a tough time there. These are closes, so we need to break above that. That meaning that now things are, changing a little bit. We need to break above this angle. Using the ellipse, we're kissing the ellipse right here at the 0. At the arc, so let's see if we could penetrate that and hold this arc momentum to the upside. And maybe lastly, we had a crossover here around the 7th. We put a high in the 10th, pulled back down. The ellipse end here around 423. Change of contracts. We need to at least take out this high of $1.97 to push higher, at least to get to my target, which is 232. Okay, so this is the master chart with some other things that I look at. First off, I'm going to start out with the neural net, the computer. Computer said it was going to be topping around 418 and kind of sideways with a pivot high around, or turning point around May 23rd to the 29th, last week, probably of May, and then down. But we haven't seen that yet. It's just been kind of consolidating, going sideways. So it didn't pan out with the neural net. But I wanted to show you just so you can see that sometimes things don't work out. Now, this one's the one that's interesting. So these are the natural cycles, and these are all pointing up. And they get toppy around May 14, 15. That 14, 15 week, it gets very toppy. And even around 6/15, which is June 15, around there. Now, this teal line here, this is a price action that has happened in the past, and it gets toppy around the last week of May. So what I'm trying to say here is if we do get a rally, it's going to be short-lived. I know June, July, seasonality-wise, natural gas is weak. But nonetheless, it gets surprises. I don't know what the summer brings in regards to weather, like I said, but just know that if we do get a rally and we just start chucking along, maybe we hit my target of 232, maybe we even go past it. Once we get into May, don't get too excited because there is going to be a turning point. And the 17th is is a date I'm watching, and you can see that the seasonality also say somewhere around May. We didn't get the rally in April that we wanted, or maybe it's just starting, towards the end of the month. But there is another, kind of rally into May. So let's see if this plays out. I know there's other things in the chart that I want to show you, but I just want to kind of show you what the natural cycles and what's happened in the past here. So let's see if this move is going to play. This one indicates maybe pretty much the last week of May, turning point into June, and then a leg high. I don't know if this is going to play out, but we'll see. Okay, this is the last clip of the day. So you can see that we're above now value area low of $1.83. Change of contract. This is the area you want to be concerned right here. This is where the bears hang out. Anywhere between 207 all the way to $2, pretty much. This is all. Once we break above 207, we got a fighting chance to get to the weekly midpoint, which is 258, but I have a target of 232. But, you could get up here. Mine's is more, conservative. Looking at our daily market profile, we are above value area high. You can see this area, bear camp. Just be careful. We need to break above that in order to at least get to 216. Let's look at our simple glance. MACD still positive on the monthly. We still haven't had a positive Hikanashi candle like this or like this. Not yet. But holding this pivot of $1.95, you can see PPS buy signal, but this is all due to the change of contract. Trading around, $2 and in this area right here. Possible targets to the upside would be this 210, the SS20 SMA. And so far, MACD is still holding positive. And on the daily, change of contract, PPS buy signal, I ignore this. Linear regression channel, this is like, because of the change of contract, it's like a artifact, as I would call it. But we're in the cloud, so things are going to get volatile here. What's interesting is, do we fill the gap? I'm looking at it two ways. We may fill the gap, but not right away, or maybe right away. If we don't fill it right away and we kind of hover around here, maybe retrace a little bit, and then the bulls show up and push it higher, may run bullish into May, and then somewhere around May stall, and then fill this gap. Maybe push lower, or maybe, test the lows. We'll see. But the gap is there, and I know some people say, well, it's not really a gap, it's change of contract. Whatever it is, there's a big hole here. Just look at it like that. There's a hole. Is it going to fill this hole? We'll see. Time will tell. Change of contract gap? I don't know. I always call it gap. But nonetheless, MACD is positive. Let's see how the open, goes. And if we're going to pull back, maybe we fill it up and then go higher. We'll see. Let's go into our 4 hour. And so far, you can see that we were stalled around the 20, you can say maybe the 75% right here. You got your midpoint here, and you got the original Andrews pitchfork, which, now we're below this angle. So this is the important one. This is the original from your first impulse and down. And then we came up. So if I see any Momo to the upside, I'll move these over here. but we'll see. But so far, stalled at the 75, still, could hold this 50%, 192, and maybe from here bounce and push another leg higher, and then in the future, fill this gap, which will remain to be seen. Let's look at our channel. It's another thing I included in my analysis. Yep, 75, you got your midpoint right here from this ABC. And 3.5 high. This is your second impulse right here. Failed it. You got the 25% of $1.88 right here, support. Also, you got the $1.84 right here. And this is your important angle right here, the 1 by 1 from the first, you can say the second impulse wave. And let's see, the 4 hour, the original one, you can see that I have some trend lines and it's finding support right there. If this holds, then chances are we could maybe push higher, but this all remains to be seen. Let's see, I think that's it. I don't want to make this video too long. Oh, FT levels. This is the DNA levels that I have for nat gas. And so far, we're at a good spot. We have made it all the way to here. This is important, between 195 and 191. The next one will be 228 all the way to 225. These are DNA levels for nat gas. And my target is this green one right here, 231. So let's see how we chuck along to go down here or go up here for this target and then eventually fill this gap if it's going to do it. And lastly, let's go to a midpoint chart. As you can see, we're kissing or hovering around 192, which is the 194 April 14 low. So far, we're above all these targets for midpoint. So if we hold this 20, you can say 75%, $1.90, that's good. We could push higher. This is your high, which is $2, and break above, maybe 210. The next bigger target, 225. Let's go backwards. Bigger targets. 225, $2 to 210. And then obviously for the week, we need to stay above $1.79 to hold for this week. And targets to the upside would be 210 and 221 for the whole week. Even if we pull back or whatever, or fill this gap and retrace back up, those are your bigger targets. And for tomorrow, it's kind of narrow. So $1.96 is your midpoint and 205. And then to the extreme low would be $1.86. So if it's going to push, hopefully maybe $1.86 holds. But if that doesn't hold, which is $1.86 around here, $1.89, then chances are your midpoint, which is $1.79, should hold. And lastly, square of 9. So we're at the $2 range right here. That'll be 204 and 211. Those are your bigger targets to the upside. Keeping in mind to 212 and the 214 right here. Then we could break above that, then 218. So we'll take baby steps. Let's get to 204 at least. But if they're going to tank it and push it lower, obviously, first thing is fill a gap. But if it doesn't fill the gap, 197 support and 190. And maybe bounce back up. And if it's extreme, 183. So those are your levels. I'm going to sign out. Hopefully you like this video. I'll keep you posted on my thoughts on that, guys.